All right, cool. Hey, sorry about that, Sam. We can get started if you're ready.
Yeah, sure.
Awesome. Well, welcome everyone. We got Sam McPherson in the house with MakerDAO. Sam, before we get started, do you want to give us a quick background? I think you and I had a really great conversation when we chatted a few weeks ago. Can you give us a quick background of yourself, your career trajectory, the kind of work you've done in the space, so the audience get to know you a bit better, and then we can talk about MakerDAO.
Yeah, sure. So I joined into crypto more as a hobby investor in the 2017 bull cycle. Became interested particularly in Maker, just kind of looking around at various investments. And that was 2018. And a couple of years later, I ended up starting to work at the protocol. So I had kind of an interesting path into MakerDAO in that most of the people at the time in 2020 were working at the foundation. I was the first to be onboarded under the DAO as a smart contract engineer. So yeah, I never worked for the Maker Foundation. So that's kind of an interesting tidbit. Yeah, so I've been working for MakerDAO under the protocol engineering team as a smart contract engineer since August 2020.
Awesome. So you've been part of the team for a while. And can you give us a high-level overview, in your own words, of what MakerDAO is, how the MCD system works, and then we can jump into the nuts and bolts of things?
Yeah, sure. So the Maker protocol facilitates the minting of the DAI stablecoin, which is a synthetic asset that is meant to track the price of the US dollar. So it uses all kinds of different mechanisms to do this. The first being the ETH vaults. This was there was also a single collateral version that was launched in 2018. So in this mechanism, users can take ETH, and let's say they have $150 worth of ETH. They can then mint up to the collateralization ratio limit of that ETH. So just for round numbers, let's say you need to maintain a 150% collateralization, then you can mint up to 100 DAI for that $150 worth of ETH. And then with that DAI, you can do all kinds of things. Usually people leverage with it. They go leverage long on ETH, and so they'll take that DAI that they mint and then buy more ETH and add it to their position, but there's all kinds of things you can do there. So more recently, there's been additions of what are called peg stability modules, which are the first one being USDC. So that is another tool designed to keep the peg in line for DAI so that it's always, or at least in most common cases, is redeemable for $1 US dollar worth of collateral. The Maker system has been around for a while, and it's taken the conservative approach of making sure that there is always more collateral in the system than there is DAI outstanding. This is to ensure that there can't be things like bank runs and whatnot. Yeah, so this is, yeah, it's basically a high-level overview.
Got it. So Sam, I had a couple questions on that, and this is a topic that my friends and I have had debates on in the past, but the whole ethos, the initial ethos of MakerDAO was to have this decentralized stablecoin, which you've explained the collateralization component of with ETH. When you guys introduced USDC, doesn't that kind of take away from that whole decentralized ethos, since USDC is a very centralized stablecoin?
Yeah, so I'll make a couple points on this. First, there is what we call a stablecoin trilemma, in that you can only have scalability, decentralization, and I can't remember the third one. Anyways,
security.
Security, yes, okay, thank you. So basically, you have to choose which route you take. DAI as a stablecoin wouldn't have been able to scale past a few hundred million if we didn't onboard USDC and other stablecoins. Now, that being said, this is viewed as a crutch, and although a temporary crutch. And although USDC is super valuable for maintaining the peg, it does trade off decentralization for centralization risk with particular counterparties, as you said. However, Maker is trying to move even further in this direction by having lots and lots of different counterparties. So we have multiple centralized stablecoins as backing. We're further diversifying by directly investing into US treasuries. So by having a large collateral portfolio, it still helps with the diversification and decentralization aspects. It's good to keep in mind that decentralization is an emergent property, and it can come about from centralized components.
I'm going to steal that quote. From you, Sam. What other basket of goods is DAI collateralized by then? So it's obviously Ethereum. Then you guys introduced USDC, but you've said other stablecoins as well. So if you can give us a breakdown of that, I'd really appreciate it.
Yeah, there's a number of collaterals. I think there's about maybe on the order of 20 to 30 now, but I'll go over the big ones. So USDC is the largest collateral portfolio right now. During the bull market, it was ETH and wrapped Bitcoin that were the dominant collateral types because, well, we were in a bull market, so people were naturally levering up a lot. So that shifts depending on the market sentiment. Other stable coins that we have are we are collateralized by Gemini USD as well as Paxos USD. So they each have about 500 million of the supply, and USDC is 2 billion. And then more recently, we are collateralized by what is called Monetalis, which is a direct investment into a BlackRock money market fund ETF. So that gives us more direct access to the underlying treasury yield, which is great for revenue.
So you guys are diversifying, for example, into this BlackRock ETF. How does that work? What are you diversifying with the basket of goods that is being collateralized? Or give us some insight into that process, please.
Yeah, sure. So you can think of it like this: when we onboarded USDC, there is arbitrage mechanisms that every time the peg goes above $1, let's say DAI is trading on the market at $1. Since we have this peg stability module with USDC, there is an opportunity for an arbitrager to make a profit off of that, because they can take $100 worth of USDC, they can mint $102 worth of DAI, and then sell that back into the USDC on the market. This will bring the peg back down, and this keeps it in line. But the secondary effect of this is that it loads up our balance sheet with USDC. Now, this is all fine and good, but USDC is currently yielding 0% return to us, which is not great. But this USDC is a protocol controlled value, so we can invest it into other instruments. So for this money market fund, this is done with a real world asset arranger. They will mint some DAI. They'll move it out through the USDC, redeem it for the US dollars, the underlying reserve, and then take that cash and put it into the BlackRock ETF, just like you would with like outside of crypto normally. Hello? Did I lose you?
No.
Yes, so the main large-scale crypto native collaterals are ETH and WBTC, and now we also have liquid staking derivatives such as Lido staked ETH.
And how would that work? You would just stake your Lido, your I think it's LETH or whatever you're given in return of staking into Lido, and then collateralize that and get DAI?
Yeah, exactly. It's just like you would do with ETH. People primarily like to use it for leverage. So if you have some staked ETH that you're earning a yield on, and you want to lever up on it, then you can open up a vault on Maker and then mint some DAI and buy more staked ETH.
So one of the things I'm curious about is what would happen hypothetically, and this is what a question I had when you guys first became very prominent. What would happen if the price of Ethereum just plummeted? If I know this is kind of a black swan event, and it's probably never going to happen. Never say never. But what if Ethereum just went to pretty much close to zero? Would that collapse the entire DAI stablecoin, or do you guys have enough diversification into other assets, or even in this case, the ETF, where you guys would be able to remain pegged to the dollar?
Yeah, I mean, this is an interesting scenario because Maker lives on Ethereum, so presumably something has gone terribly wrong on the Ethereum chain in that scenario. But just like purely from a market perspective, we would survive that just fine, assuming there's not some terrible event affecting the chain itself. If it's just the market price of Ethereum, people would just close out their positions, and that missing supply would be filled in with centralized stablecoins.
Understood. So, Sam, what are some of the common proposals that governance votes are usually casted upon? Is it simply adding new assets to that collateralized or over-collateralized baskets of goods? Or is it adding new options for assets to be collateralized? I'd love some more insight into that structure, please.
Yeah, sure. So maybe I'll just run through some history on this because the thinking has evolved over time. Originally, when MCD is multi-collateral DAI, so when that was conceived, the idea was that although real-world assets were still on the long-term goal, there was the view that we would collateralize DAI with ERC20 small cap tokens. So this would be like the Uniswap token or like Link or various others. We onboarded a whole bunch of those, and that was fine. It was a good experiment. The problem is that there's just not enough demand with these smaller cap ERC20s to get up to the supply amounts of billions of dollars. So we've shifted, or Maker's shifted since then, and adopted more of a large scale assets only. We're Maker's only interested in things that scale. So that is basically for crypto native, that is only really ETH, Bitcoin, and liquid staking derivatives of ETH. It's possible that like layer 2 tokens such as Optimism's token, or when Arbitrum launches one, or Polygon's Matic, those may be at that scale as well, but we'll have to see. They're not there yet. So for the crypto native, those are really the only options at the scale of billions of dollars. And real world assets are the only other thing that works. I mean, if you really think about it, like most assets on Ethereum are either ETH or real world assets. At large scale.
Sam, I mean, I don't see much of a downside, and correct me if I'm wrong here. Is there much of a downside in adding a volatile token? Because at the end of the day, if someone wants to choose to collateralize something that's highly volatile and the price plummets, they get liquidated and the protocol keeps that liquidity or keeps that collateral, right?
Yeah, I mean, it's an option Maker can go down. It's just it's not free to add collaterals. There's maintenance and overhead, and so it was just viewed that it wasn't worthwhile.
Understood. And as far as the Maker token is concerned, I know that the main function is governance votes or governance influence. Are there any other token utilities with respect to MakerDAO that the token offers?
Utility? No, I think that's fair. Just governance is the main utility.
Has there ever been any proposals to add some sort of an earning structure to make the Maker token? I know that I'm going to use this, for example, abracadabra.money. The spell token lets users that stake it earn a percentage of those protocol fees?
Yeah, so there's been no shortage of proposals to this tune over the past few years, but nothing has come in yet. There is some plans within Rune's endgame plan to activate some yield on the Maker token. Yeah, you'll have to go read his plan. I'm not super familiar with all the details of what this particular aspect is, but I believe there is a component where yield will be earned on delegated Maker.
Is there a reason that or you said there's been no shortage of these sorts of proposals? Is there a reason that none of them have ever passed? Like, what are your personal thoughts on adding some sort of a yield mechanism for or rather a yield reward for the Maker token?
Yeah, I mean, it has to be done very carefully. Like anything, like you add this in, and it's possible there may be no turning back, and potentially it's not the right incentive structure, and it leads to the destruction of the protocol. So you have to be, like with any of these types of incentive mechanisms, you have to be very, very careful with switching them on. And why particular proposals? I would say about half or more of proposals don't pass in general. So there's just, because it's a permissionless submission, yeah, just lots of different things have come through, but not everything passes.
Fair enough. Is the actual allocation of Maker tokens super centralized, or is it pretty decentralized with this other governance, kind of governance token allocations?
It's a good question. I wouldn't say. I would say I'm not the expert at knowing what the distribution of Maker tokens is compared to other protocols. There are definitely some larger players who have a lot of Maker allocations, but I think that's kind of true of most protocol governance tokens. So I can't really comment on whether it's more or less decentralized than any other, really.
Fair enough. Sam, has MakerDAO had any major attacks in the past?
Yeah, I would say the most infamous one was the Black Thursday event. That was March 12th, 2020, when that scenario, similar to what you were just saying, the price of ETH dropped by 50% in one day due to the pandemic. So that event resulted in a lot of liquidations. The Maker protocol then was just launched. It was actually launched in November 2019, so it was actually only about 5 months old at the time. Market cap much smaller than it was now. I believe it was under 100 million at that time, so just very small. But yes, that super devastating event happened, and it was it almost was the end of the protocol. But the people, I wasn't working there at the time, but yeah, the people working there managed to squeak through. So the bad thing that happened then was there was a kind of a bug. I wouldn't really call it a bug, actually. It was incorrectly defined parameters where the auctions were 10 minutes long. So somebody was able to kick off hundreds of auctions all at the same time and bid $0 on all of them. So they ended up, I think, like getting about $8 million worth of ETH collateral for free, and that was a loss for the protocol. But there was an interesting effort that happened right after, as everybody rallied together to have the Maker that would mint to cover the hole in the balance sheet. There was buyers. There was buyers that filled in this hole and recapitalized the protocol, and it carried on. I mean, the parameters could have been done better in hindsight, but it was an interesting test at the very beginning of the protocol.
Yeah, I do remember a lot of these early grandfathers of DeFi having issues here and there, but ultimately the community rallying together to make the protocol whole. And it seems like you guys have stood the testament of time. Sam, any major innovations coming up? I know that at least from a high level front end overview, MakerDAO it's pretty simple, right? You guys are an over collateralized stablecoin backed by Ethereum, WBTC, and a bunch of other assets. You mint DAI. DAI is pegged to the dollar. I know you've told us that you're now diversifying into ETFs, but would love to know if there are any major innovations coming up or anything exciting in the 2023 roadmap.
Yeah, for sure. There's a lot going on. So something interesting that happened recently is Maker reactivated the DAI savings rate, which is the risk-free yield that comes on the asset. So this is like, normally you earn a yield, like if you have DAI and you can like lend it out on Compound or Aave or something like that and get a return, but that DAI is borrowed. So that yield is for you lending out your assets. Whereas the DAI savings rate is just the intrinsic yield that everybody has access to, with, you know, caveats of smart contract risk, but it's roughly the same risk as just holding DAI. So that was just reactivated December and it was set to 1%. But I've heard there's people wanting to raise it to 2 to 3% once we get more of these real world asset deals online, where Maker can get access to the TradFi safe yield. So that's an interesting development. I would say just on the real world asset front in general, this process has been going on for like, I don't know, since the beginning of multi-collateral DAI, and finally seeing it come to fruition is pretty exciting. So a lot of the legal structures and processes involved having a non-legal entity of a DAO be able to invest in real-world instruments is pretty cool. And so we're seeing this now starting to scale up. So the Monetalis deal is one of the bigger ones now, but we should expect to see more as the year goes on, especially with the interest rate environment we're in right now. There's lots of money being left on the table by not having these things online. And then, so on the technical front, Maker's expanding out to layer 2s, side chains. It's probably, I'm in particular working on that. So it's probably one of the more complex things we've taken on. So having Maker available on layer 2s, side chains, able to mint DAI on Optimism, stuff like that. So that's coming. That'll be coming this year. So much stuff. The transition of locking down the Maker Core DAO and then splitting out into sub-DAOs to encourage competition and innovation and new excitement. That's a big development that's really picking up speed right now as well. So yeah, there's lots going on.
So the splitting up into sub-DAOs, does that encourage competition by giving those sub-DAOs or giving smaller, giving entities with smaller voting power more influence? I would love to have some more insight into that, please.
Yeah, so the sub-DAO structure was thought of because of the increasing political issues that were forming within MakerDAO governance. You know, things were all fine and good in the bull market, but bear market, you know, you got to do hard choices. You have to like lay people off and, you know, cut services just because there's not as much money as there was, and it's a part of any entity really. And as a way to deal with the political gridlock that can sometimes occur in larger governance structures, and to me, this is very similar to like politics and governments and stuff like that in the real world as well. To keep the innovation going, Ruin has proposed an endgame plan where the sub-DAOs are formed and they have their own token, and these sub-DAOs are free to innovate however they want. I mean, there are limits, but like basically some sub-DAO wants to launch a new product. They no longer have to go through the core governance, which is very bulky and it's slow, and maybe not everybody agrees with this direction. So with the sub-DAO structure, people are free to split off into their own aligned camps and work on whatever they want. And if they're delivering value, then Maker Core can give them credit lines and stuff like that.
Very cool. And I honestly didn't know too much about the way Subdials work and how each have credit lines and how each can have their own tokens. I wasn't even thinking along those lines. Sam, I know that there's, I think it's the Spark protocol. I'm not too sure, but you guys are building out a lending protocol that's meant to compete with Aave. Can you give us some more insight into your plans for that? When we can see its release? Is it going to be available only on Ethereum first, or is it going to come out, come out of the cage multi-chain?
Yeah, sure. So Spark Protocol, we're aiming to launch that in April, pending Maker governance approval vote. Basically, the idea with that is that Maker Core only has access to certain features that people may want. So, for example, as the examples I was giving before, somebody may want to go leverage long on ETH against a stablecoin. That's fine. They can do that in Maker Core. But let's say somebody wants to short ETH. Maker Core cannot currently do that. Or if they want to cross-collateralize their position, maybe they want to collateralize it with ETH and Bitcoin and have the same debt denominated against both of those assets. Again, that's not something that Maker Core offers, but advanced liquidity engines do. So stuff like that, as well as higher collateralization ratio. Maker Core has a 1 hour Oracle delay, which means that they have to run higher collateralization ratio requirements, which means less capital efficiency. So maybe users want more capital efficiency. So this is also where Spark Protocol can step in. It's basically to fill in all these missing pieces that Maker Core can't necessarily cater to these users. So to give DAI holders the best experience, we want to have all these features basically. So yeah, that's the idea behind that.
Awesome, super exciting. Another DeFi protocol to play around with. I'm a big fan. Let's see. A colleague of mine read in a news article that the MakerDAO Constitution had planned to allocate 20,000 tokens from its reserves towards funding scientific sustainability initiatives. I'm not sure if you're able to further elaborate on that and the overarching vision with regards to this initiative.
Yeah, I mean, I can't really comment on that. That is Rune's put out that post and he's outlined. Honestly, I'm not even that up to date with that particular piece.
Yeah, no worries. So, as we all know, the SEC has been extremely scrutinizing of stablecoin issuers. To my surprise, they went after BUSD, which is issued by Paxos, heavily regulated in New York. This is kind of bizarre to me that they went after Paxos. So, given that DAI is a stablecoin, and it is backed by a basket of cryptocurrencies, also some of those currencies being stablecoins. Do you think that DAI, if it's not already, may face regulatory challenges, particularly around issues related to compliance, security, anti-money laundering, anti-money laundering, and kind of all that stuff? So, would love to hear your thoughts with respect to DAI.
Yeah, so I'm not really going to comment on specific cases, but in general, it is a little disappointing to see the trajectory that some members in the U.S. government have been taking. It seems this action is potentially going to drive users to Tether, which is, who knows with Tether, it's fairly opaque. I would much prefer, I think I'm not a person who thinks all regulation is bad. I think regulation with such as centralized stablecoins is very helpful to consumers and makes the whole ecosystem a lot safer if it's done properly. So I find this recent development, it's disappointing, and I hope it course corrects.
Makes two of us. Does MakerDAO ever plan on creating its own layer 2? Are there any benefits in doing that?
Yeah, so it's interesting we're seeing happen with the layer twos and layer threes. I think it's likely that it would make sense for Maker to build its own app chain. Now, will that be a layer two? Not necessarily. I think with these ZK rollup technology, it's looking more like it's going to be layer one Ethereum as a settlement layer, very expensive, but very secure. You have these layer two ZK rollups, which are more pooling liquidity and stuff like that. And then you have high throughput application specific chains on top of that in layer threes. I think that's my best view of it right now. Granted, I'm not an expert in this technology. I'm an application developer, so I just use it. I don't understand all the details quite yet, and this stuff is very fast moving, but that's my current view of how this may look.
It's super interesting, Sam. I actually always you added a layer on top of it, so I always envisioned it as Ethereum being a chain of proofs, and then all the transactions happening on highly scalable, highly efficient layer twos and rollups, side chains. So you're saying that even one step above that, layer threes can come in and make things even more scalable than that.
Yeah, exactly. Like you get these ZK rollups that are like rollups of rollups, and it just increases the throughput. If you trust the math, then you get this trade off. Now you don't get it for free, so there's like trade offs with pooling liquidity. So that's a concern. Like you can't just have everybody siloed away in their own app chain completely, because yeah, you'll have issues with liquidity. But how exactly this works out, I'm still kind of learning and updating my views with everybody. But yeah, I think that's looking to be a pretty likely scenario in my view.
Awesome. Well, look, Sam, I have a community member that usually asks spot on questions, so I'm going to pass the mic to her real quick. Aisha, go for it.
Yeah,
Aisha, you
thank
there?
you. Yeah, I'm here. So, I was thinking, what is voter turnout on the proposals that are put forward for voting, and what incentives are you offering to the holders to participate in the voting process?
Yeah, so currently there is no extrinsic incentives to vote. I believe as part of the end game plan that Brune is putting out, it will offer a yield on Maker that has been delegated to vote, but currently there is none.
Understood. And I have read on your Twitter page that any implementation that represents a technical change to MakerDAO or the Maker protocol has to be included and enacted in a further executive vote. I was wondering, executive votes are carried out by MakerDAO Foundation, and what is the role of the MakerDAO Foundation, and how does it contribute towards development and growth of the MakerDAO ecosystem?
Yeah, so the Maker Foundation dissolved. When was that? It was the summer of 2021, I believe. They're no longer an entity. The word executive vote, maybe it's a little bit misleading, but it's just something that executes on chain. It has nothing to do with authority other than the authority of the maker holders. It's a purely on-chain smart contract.
Got it. It makes me clear now. Thank you so much for answering.
No problem.
Thanks, Aisha. Captain Levi, you're next.
Yeah, thank you, Noah. Okay, so from my understanding of one of the statements you made, I get the concept that users can actually lock up their cryptocurrency holdings as collateral to, get even more DAI tokens. Is there any specific crypto that these guys can actually lock up? For example, they are already well-known ones like, Bitcoin, Ethereum, and BNB. What requirements would these cryptocurrencies need to meet before they can be locked up for on MakerDAO?
Yeah, so any collateral that gets onboarded to the Maker system needs to go through a collateral onboarding process. So the Maker holders have to approve any token that gets onboarded, and there's all kinds of criteria to determine whether that happens or not. And as I said before, Maker has shifted towards being only interested in highly scalable collateral, and this really is basically restricted to Bitcoin, ETH, and liquid staking derivatives as of right now.
Sounds good. Sounds good. So I would like you to connect it to the emergency shutdown process that I am seeing on your technical docs, because I'm also seeing here that DAI holders can actually redeem DAI for their collateral after an emergency shutdown processing period. Could you give me an overview of the emergency shutdown process, and how does it connect?
Yeah, these are really good questions. So emergency shutdown is a minority token holder protection mechanism. This is to prevent the case where governance, somebody who is malicious gets enough of the Maker tokens to execute some malicious code. Now, what emergency shutdown is that if there is 150,000 Maker put into this module, it will shut down the whole system, and it makes sure to award the collateral backing pro rata to the amount of DAI at the value of $1. So this is an irreversible process that ensures that DAI holders have an orderly exit to collateral, and this is very important because not only does it protect against these governance attacks, it gives holders of DAI confidence that if something goes wrong and people are all panicking, exiting, in a worst case scenario, you will still be able to get back all of the collateral, and that's important for confidence.
Captain Levi, you there, man? I think you might have DC'd. Hey, Venice, go for it, brother.
Yeah, no, thank you so much. Okay, I want to know that is there a time limit for DAI holders to claim their remaining collateral after an emergency shutdown?
Did you say a time limit?
Yeah. Is there any time limit after the emergency shutdown so that DAI holders can claim their remaining collateral?
No, there's no time limit. Actually, funny story. So single collateral DAI, the beta version of multi-collateral DAI, was shut down. And actually, if you check on CoinMarketCap or whatever, you can see SAI, S-A-I, is trading at about $8 because it's redeemable for that the value of what ETH was when it was shut down in I think it was 2020. So ETH was trading around $300 at that time. So single collateral DAI is still redeemable for that ETH, and that's why it trades at the equivalent value increase that ETH experienced even years later.
Okay, I understood. And while I was going through the white paper, and you mentioned actually the data provides a list of emergency situations that could trigger an emergency shutdown, but it does not clearly specify the specific conditions or criteria that would prompt Maker governance to initiate such a shutdown. So could you please explain a little bit more about this aspect of your project?
Yeah, so I mean, there is no strict like on-chain requirements other than you need to have 150,000 Maker, and to be clear, you have to destroy that Maker. So you have to be very, very sure that what you're doing is what everybody wants, and what this would, like, it can be any number of things, but what it would probably look like is somebody that was able to gain, I don't know, 20, 30% of the voting share for whatever reason. Maybe they've bribed people, who knows? And they want to steal all the collateral or something like that. That is clearly not a desirable action by anybody. So there is this 2-day delay that if they were to execute some malicious action like that, it would set off alarm bells right away. And if there was not enough time to have a counter action of collecting that, the last case, the last line of defense is this emergency shutdown. So holders who don't have enough to overpower the malicious attacking vote, but have 150,000 Maker, which is about 15% of the supply, they can trigger an emergency shutdown, and then everybody is made whole again at the end.
Okay, it makes sense. And one last question from my side. What kind of metrics can be used to assess the reliability of the emergency oracle system, and how can the data related to the selection of emergency oracles be analyzed to determine the effectiveness of the selection process in choosing trustworthy actors?
Right. So you can look at the assets and liabilities. The site I usually use is MakerBurn.com, which is MakerBurn.com. So that will show DAI outstanding. It'll show DAI outstanding broken down by collateral type, how much collateral is locked in the system, so you can be confident it's over collateralized. And for the newer stuff with real world assets, I'm an advocate of getting, I think some of the Oracle networks are starting to do this, where they'll have Oracle present for the ETF, and getting more of this stuff on chain is the key to having it be fully transparent and understanding what your assets versus liabilities are.
Okay, understood. And yeah, thank you so much for answering my questions.
No problem.
Hey, thanks, Venice. Captain Levi, you disconnected. Did you have another question, or I'm gonna move on to Sam otherwise?
Yes, I actually did. Sorry about that. It was probably my network connection. So I would like us to talk about your JavaScript the library, the JavaScript library. From the looks of things, it's actually a unique built JavaScript library where developers can actually build DeFi applications on MakerDAO platform. So this library, did you guys? I guess there must be a forks from other major similar protocols. How does the process, if I happen to build a DeFi application, how is the process done so that it can become officially recognized by the MakerDAO protocol?
Sorry, which JavaScript project is this? I haven't worked with JavaScript in a while.
Oh, okay. It's still on your technical docs, the DAI JavaScript library of the Maker protocol. I don't know if you're aware of that.
Yes, sorry, I understand what you're saying now. Yes, I actually personally haven't really used that. But yeah, the team made that before I joined. But yeah, it's used for like querying smart contracts and stuff like that, from my understanding.
Okay, that's actually nice. My final question is about your bug bounty. From my understanding, I'm seeing that it's governed under some terms set by MIP64, and from the summary you provided, there are actually rules, and it's still connected to governance. So when someone presents possible threats, how quick is your reaction to assess that threat? Because this is basically one of the core items that needs to be frequently checked. But from what I am seeing here, it says that the process needs to be sped up. What's your response when people present possible threats that may need some attention?
And this is the bug bounty program you're referring to, MIP64?
Yes, the bug bounty program for MIP64.
Yeah, so we're running a normal bug bounty program just like any other protocol. So if somebody finds a critical exploit in these smart contracts, there's a process to submit that, and then there's many ways we can deal with that. If there's an emergency situation, we have a tech ops team doing monitoring, stuff like that, just to always be alert of what's going on in the system. And then it really depends on the situation after that, whether a vote can be rallied, maybe the smart contract bug can be white hat hacked. Like it really depends on the situation after that.
Thanks a lot, Sam, for answering my questions. I'm wishing you guys the very best, and I hope the MakerDAO project continues staying bullish onward. Over to you, Noah. Thanks, Noah.
Thanks so much.
Hey, thank you, Captain Levi. And I think we have Sam next, and then we'll go to Sayed, and we'll wrap things up.
Hey, so I was just wondering, so you mentioned DAI is a synthetic asset pegged to USD. I'm just wondering why there, like, what do you think is the reason why there isn't like another kind of synthetic asset, like pegged to like GBP or Euro, or just interested to hear your thoughts on that?
Really good question. I think there actually have been attempts to do that. It's just the world loves the US dollar, so everybody transacts with it globally. So I think that has less to do with crypto specifically and more just the world at large. But that being said, like having synthetic assets of different types of assets is super valuable. So one of the next things that Maker is working on is EtherDAI, which is, you can think of it exactly like DAI. It uses the multi-collateral system, except it's one-to-one pegged with ETH. So this is very useful, especially now that the Shanghai upgrade on Ethereum is going out. Liquid staking derivatives of ETH are becoming very popular. And so this will give Maker a seat at the table in the ecosystem that it lives in.
That's awesome. That's awesome. I had another question as well. So I think this like push to bring yield to DAI holders, I think that's like really amazing. But I've just had a question. Do you feel like there says the kind of centralization of pursuing that yield strategy is at odds with the kind of decentralized ethos of Maker? Or do you feel like those two can kind of like coexist, if that's clear?
Yeah, so Maker's always kind of taken this line of being a middle ground. As I said at the beginning of the call here, you have to make trade-offs when you're building a stablecoin. So in order to scale up to the size of billions, you have to have some degree of exposure to the instruments that are close to the underlying asset. It's like a force of nature. You can't get away from it. So finding this balance between having a stable coin that's at $1 US and you can use it and be confident in it, along with parallel efforts to buy ETH collateral to back DAI with that, to give preferable rates to people who want to back their DAI with decentralized collateral such as ETH. This is always a balance that just needs to be struck, and yeah, Maker I think is correctly finding the middle ground between those two.
No, that's awesome, super interesting, and yeah, I love Maker, and best of luck for the future.
Thanks.
Hey, thanks a lot, Sam. Sayed, you're next, sir, and then we'll wrap things up.
Yeah, thank you, Noah. Okay, so you have been talking about these real-world assets. So I was wondering that which real-world assets in future will be used as a collateral for the DAI stablecoin, or this proposal has been turned down? And can fiat currencies also be used as a collateral in future, maybe?
For the DAI stablecoin?
Yes, yes.
Yeah. So anything can be used as collateral, but it has to be tokenized on chain or some sort of agreement. The best scenario that Maker wants is to have fungible assets that are tokenized on chain with very liquid secondary markets and strong Oracle prices. So if Maker has this, it doesn't matter if it's like a crypto native asset or a real world asset. I mean, USDC is a real world asset. It's probably the closest thing we have to actual cash in the real world, but it needs to live on the blockchain, so you have to tokenize it. If Maker has that and the collateral can scale, yeah, that's something that Maker would be interested in.
Got it. Got it. Thank you so much for answering. How about you, Noah?
Great. Thank you, Rahmat. Hey, Sam, thank you so much for coming on today. I know you're a busy guy. You guys are building amazing things over there at MakerDAO. So we really appreciate you coming on to Whale Coin Talk, speaking at the aquarium, and really giving us insight into all the, on the developments and the origin story and nuts and bolts and nuances of MakerDAO. So if you have any final words to leave our audience with, go ahead and do so now. Otherwise, I'll wrap up the space.
Yeah, first I'll say thanks so much for having me on. This was a lot of fun. For people who want to get more involved, I would say pay attention to the recent developments, get involved in the forum. Maker's getting, has kind of a view of Maker being like more conservative and old school, and they don't really do things, but with some of these changes with the endgame proposal that Rune is putting forward, Maker's going to be moving fast and innovating. So you can get on the ground floor and get involved with the new developments there.
Right on. Ladies and gentlemen, that was Sam McPherson of the MakerDAO ecosystem. Remember that everything you hear on Whale Coin Talk is meant for educational purposes only. Nothing is financial advice. So be safe out there, everyone. We'll see you all tomorrow. Take care.